What's up, everybody? It's your boy, Brandon, back with another edition of the Macro Insights podcast. But first, before we get started, a little disclaimer. I am not a financial advisor, and the guest is not giving financial advice. So everything you hear on this podcast is strictly opinion and should not be taken as financial advice. We disclose if we have any holdings discussed in this podcast, and you should not be following us as financial advisors. You should discuss this with professionals before you get involved or invested. And as always, it's not financial advice. So please, please, please take this strictly as our opinions and for entertainment purposes only. Now let's get into the show. What is up, everybody? I'm back with another edition of the Macro Insights podcast. And for everybody listening on those podcasting 2.0 apps like Fountain, I appreciate you streaming me sats. But I've got a very special guest. He's in the waiting room down here. I got Trader's Retreat, also known as Alex. So, man, how you doing today? I see you got the Bass Pro Shops hoodie on. You're comfortable. You're sitting back, relaxing. How you doing today?
I'm doing well, man. I'm doing well. Thanks for having me on. I don't do many podcasts. I'll have discussions on spaces all day. So this is a little bit different, but I appreciate the invite, man. It's going to be fun. I think we've kicked it off pretty well already. So.
Yeah, exactly. We were talking a little bit pre-show, but we didn't get into this yet. So tell me a little bit about your background, how you kind of decided to start putting out some trading stuff and how you got into trading in general.
Yeah, sure. I haven't been trading as long as a lot of people that I interact with, right? So basically in 2018, I had a couple buddies that I knew they're trading options. I didn't know much about it, right? 2019, one of my friends actually moved down, stayed with my wife and myself. He had a pretty bad split, with his fiance at the time. Long story short, right? I started paying attention to what he was doing and a group that he was involved in, and it became clear all of a sudden that like my concept of what trading and investing and just the stock market in general, like what that was so far from the truth, right? Or at least my perspective was so skewed. So in 2019, I really I started to dive in. I took my time. I was lucky enough to get introduced, to the market with using supply and demand, focusing on areas of imbalance, right? Obviously, that's what supply and demand is, and managing risk, right? So that's one of the biggest things. I feel like a lot of people don't get that start. They get into it with a lot of hype. Without really thinking about the downside or at least how to manage that in real time. And long story short, so I think I had a good beginning. Obviously 2020 hit, right? And that was a blessing and a curse in a sense, kind of put me in fast forward. My history going back a little bit, I was a contractor, and people who come to this, that tune into the spaces, they've heard me talk about this, of course. But, I was a building contractor. I have a family. I have 3 kids, and I was around. The company was doing fine. It was good, but you just get sick of doing that stuff, right? So with 2020, right, and the kids coming home from school, and I live down in South Florida, so it wasn't as bad as it was elsewhere, but still, kids are coming home from school. Somebody needs to be around. My wife works from home, but she's busy working, so it made sense to kind of take that leap. By the time, I guess it was 2000. Yeah, by 2019, I was starting to make some money, and then 2020 hit. And I went through a lot of lessons with that and just grew. What I found though is that so many people came into the market, right, that didn't have any experience with risk management. And much less supply and demand. I mean, there are a lot of traders who talk about supply and demand. I have a strategy that I've developed that's it's not like a big secret that's mine, right? The zones I was taught, like I said, when I kind of get introduced, building zones, and I'll show some charts here. And people that follow me on Twitter, obviously I post a ton of charts. But the other part of it is, is the risk management and really like understanding the psychology part, right? The psychological kind of turmoil that we go through when we're trading. And again, even if you're, longer term trades, right? I do a lot of short term trading. I do swing trading. And I obviously I invest. Although right now, because of the time that I got into the market, um, all my long terms, I say my long terms, they didn't last very long because everything started to come down. My entries, it's not like I got entries back in 2015, and that, or 2012 or whatever, right? And so I'm like, hey, I'm ready to get back in eventually here. But so my focus lately has been a lot of day trading, a lot of swing trading. We're getting back into, but yeah, I started Spaces. I'd always I kind of got back into Twitter a year ago. Or a year and a half ago now, a year ago from last spring, and I didn't realize how big FinTwit was, man. I got to be honest. It was, I wasn't a big fan of Twitter just for social. I'm not a big fan of social media. Like I'm not, I'm on Facebook to buy stuff on Marketplace, whatever, right? But got into FinTwit, got into the financial side of Twitter, and I'm like, hey, there's some really, really, great resources, some really good opportunities here to talk with people and just discuss, things that you can't talk to anyone else about. I mean, besides my buddy that's in real life, right? And he does still live in Florida, but I don't talk to him that often. But there's no, it's not. No one else understands, looking at investing. I mean, some people understand looking at charts a little bit and looking at companies, but man, nothing like what we find on the Spaces scene or inside of Twitter. So I was really happy to find that, and that kind of took off, man. I found, I started posting charts. I had had a chat. I left the mentorship. A group of us did because things changed at that mentorship, right? And I don't spit any names out. People that I talk to closely know who it is and whatnot. But the mentality changed. I don't know. The whole atmosphere changed. It went kind of away from risk management, and that's okay. Whatever the case is, we actually started a private group, right? A private Discord. Just and again, it was just like friends, right? It was literally a small group, and that kind of built. So when I got into FinTwit, I already had like this. We already had a group of friends. People kind of were going. They would kind of come and go as needed, and I just kind of transferred that over to. I already had Traders Retreat. That's what we called it. It seemed like a cool name. It makes sense or whatever. The idea was just to be able to get away from the BS, and discuss charts and discuss, whatever our opinions. And so that's kind of transitioned into Twitter, and the Spaces, started streaming. I would hop into Spaces. I would chat a little bit, talk about my trades. I've done very well with the day trading and the short term trades. The volatility and the strategy that I like to implement is, it thrives in a situation like this. I mean, there's risk, but the key is to really, in my mind, conquer that FOMO hype, BS, like all of that. Like if you can put a cap on that and understand like just how to trade the charts and, and again, macro comes into I've learned more in the last year. I look, about the macro scene and, paying attention to the Fed. I've always understood like fundamentals. That was one of the things that I learned right from the beginning, kind of digging into the guts of a company. But looking back over the last year, I'm like, we should have all seen this coming with the Fed. So I know it's a little longer spiel there, but that's kind of where it's led up. I can go into more detail about, what FinTwit, what's kind of evolved on Twitter. But I'll stop there and see what questions you have.
Yeah, no, I mean it's great, and I agree with you. You get access to so many different brilliant minds on FinTwit and just kind of the way it's blown up. And to be honest, I think a big reason why it blew up is it was pre-Spaces even. I think just the COVID kind of crash just had people cooped up at home a little bit more, and so they decided to go through the share of information. And I think a lot of that kind of gained popularity when it came to the Reddit Wall Street bets, that kind of stuff. People were just kind of sharing ideas back and forth. But now I think it's, it's if Twitter even seems to be embracing it with like ticker symbols now. If you search it, you can see the latest stock chart and everything like that. So I think, you know, one, it was people kind of being cooped up at home, and then two, like Twitter's now kind of recognizing like, hey, we've got a pretty big audience here that it's like that. And it is like amazing, right? We'll get people on spaces that, you know, that the night before they're on Twitter Spaces with us, and then the next morning they're on CNBC talking to on all that stuff. So it is really cool, and you learn a lot from these people. But I want to take it back to
Yeah.
I'll let you get to that in a second. But um, you said you started in like 2018. So you had a very short period of time that you kind of like got into this trading and started to learn before this COVID crash and a bunch of this macro stuff. So why don't you dive a little bit more into that and tell us like, all about that experience as to, learning basically as you're going in a lot of uncertainty in the market.
Absolutely, man. Yeah. So, and I laugh about it because it was kind of, it was such a 180 from, taking my time learning to like read charts and, understand like how to, just the order process, right? And then getting into options. Although that was kind of a step-by-step process. I did, I ended up like I got the basics kind of, and then I ended up doing a whole bunch of research afterwards. So I learned, I kind of taught myself on the options to a degree. I mean, you're always getting information, but yeah, man. So I remember, the Thursday before, we knew there's a couple of things that were happening. We knew, from the inside the group I was in, we knew that from the price action, we were not that we were coming up to a top, but just that things didn't look right. Okay. I remember people saying, like it's very flat. One of the plays that I got in were Roku puts. That was the Thursday before we rolled over that weekend. And obviously I remember, I don't remember the exact details, but Friday when the market opened, they were up, pretty damn well, and ended up swinging them over the weekend. And by Monday, I mean, they had exploded. So, and that's one of those things that's like a gift and a curse. But it is a gift, right? Because it literally, I mean, I forget what it was. I think I had like, maybe $500 in Roku puts, and it turned into over 12 grand, right? I think it was like 14,000, which was insane, right? I mean, that's just absolutely, I mean, it blew my mind. So now at the time I understood the risk part of options. I understood like they, by that point I knew that like they could rip up and rip down. Like you can, that was not normal. But what I didn't, it happened so fast, man. It kind of threw me. It's like learning how to ski, like water ski. You just kind of have to get out there and do it, right? You're gonna fall down on your face a few times, and then eventually you learn to like pull yourself up, and you're good to go, right? And that's how I remember the COVID crash, man. I mean, it was nobody anticipated, at least in my circles, right? Something that drastic. Looking back, there was lots of signs and signals, but on the way down, I remember getting to the bottom, and fighting that on the way up. I mean, it was such a pain. It was frustrating, man. I mean, I remember giving back definitely I've given back tons of money in the beginning, especially even through the beginning of 2019 was, there were enough opportunities with that. Luckily, there were some really big events, and that's something that I learned, right? That I understand about the market, and I understand. I also wanted to put a caveat that I know that the market. This is not necessarily a traditional market. I am kind of the opinion that the market volatility, like the market has shifted, and we see signs of that because they've created zero DTs, 5 days a week, done on SPY, QQQ, SPX. There are even brokers, doing these event trades, right? Where you can, I mean, it's legit gambling basically. You're just betting on, yes or no, right? Like is the market go up or market go down after an event? you see a lot of that happening. So I do think the parameters are changing, and who knows how long that'll last. So I just want to throw that out there because I do understand the old, this is not traditional, but what became very clear was catching the events. And one of the trades that I did not catch, but I saw kind of afterwards and happening, while the COVID crash came down, was the TLT chart, right? So TLT exploded to the upside, and it had actually exploded previously as well, but not on the same scale, but still at the time it was huge. And it became clear between that and I guess as Tesla started to grow, that was definitely getting hyped. A lot of companies were blasting upward after we bottomed out. But it became clear that like where the money was at, it was to focus on these events and to not burn, like they say, leave yourself some dry powder, right? Like, don't go chasing this crap that, when it seemed like every few weeks there was going to be an event. And that was kind of my mentality. So I would trade, I would preserve capital, and then I would, I would be in the markets. That's one thing that I have to say. It's very difficult to catch these events because you can't come up. I mean, right now we're doing things like data releases, FOMC, right, CPI. That's a little bit different because there is a calendar for that. But you don't know when Tesla's going to say, hey, we're going to split, right? You don't know when some news is going to come out. And what I got focused on those events, and while using the way that I chart on, the way that I build zones and look for supply and demand, it kind of became clear that it's like, look, I can find areas on the chart almost all the time. Nothing's perfect, obviously, but I can find areas that price, will eventually go to, and it's kind of like saying, hey, here's a gap, it might fill the gap. I'm not a huge fan of that, but I do understand it plays out, right? I'm aware enough to at least recognize it. But when I build, I see these imbalances, and I found that it's like, look, I don't know when price is going to move there exactly. I can get an idea, but I can see kind of the area, and the key is to wait for I say an event, quote unquote, and it. To come around, and then basically it'll move price, up or down to that level. And that's where these great entries are, the great swing trades, man. And that kind of set me in motion to, I don't know, how do I put it, like that. It started to play out, started to work. Right. And I knew the zones worked anyways. They're pretty straightforward. And we can go over that at some point here. I can show you some examples, but, so what happened, that I'm going beyond your question of just, the COVID situation, but I will say that my learning curve was parabolic, but it was probably a good thing. And look, I found out very quickly that I really enjoyed trading. Like, I like the challenge. There's something about it. I've always been, I was a business owner. I owned my own business. So I was always kind of like, you have to have that entrepreneurial like spirit to where it's like, I have to work through my own issues. Not many people are there. No one's going to really tell you what to do. You got to figure out your problems, but there's freedom that's involved with that, right? So that's and trading like fits. In trading in the markets, watching it day to day, week to week is literally it's kind of like the epitome or the threshold of that, in my opinion, because it offers I don't want to say unlimited gains, but it offers incredible rewards, right? And it offers incredible freedom. You can literally do it from your phone if you want to. So that's kind of what it just like it kind of skyrocketed, and I got deeper, I got more interested. My wife became she realized pretty quickly that it was definitely like where I was going to stick with it and go with it. So it was cool. It's pretty interesting. It's been an interesting last few years. That's the thing. I tell people I'm always learning, right? There's so much stuff that I can continue to learn, but what I am really good at is kind of ignoring the BS, right? Spotting, it's kind of like reading people, right? If you're the type of person, you can go into a room and you can kind of understand like what the mood is and like who's maybe, good to talk to and who's not, who's in a bad mood. That you push the same system kind of forward into the market with the news, the mainstream media, the stuff on Twitter, just everything, even in spaces, right? A lot of people have opinions, and Although I'll tell you what you said, and I'll let you go after this, but what you said about being on Spaces and how like one time at 1 minute, the night before we're talking on Spaces, the next morning they're on CNBC, or they're at their office at a hedge fund, right? Or and it's just the insight is incredible. I mean, I remember thinking when Spaces that's what pushed me back into Twitter were the Spaces. It really got me, I was like, oh, this is pretty cool. And to have access to people who I don't even know if you could pay for that access, right? You could pay for a service, but there's no way you're going to get a group from all over the place, from multiple hedge funds, from multiple angles, just all in on a voice call, So I'm hoping Elon Musk, whatever happens with Twitter, whatever your view on Elon is, I hope that Twitter can capitalize on the interest in Spaces as well as adding some video, just kind of like tuning it up, right? Because I think Twitter has huge potential, and it's not just in the financial markets, but I mean that'd be enough. I think it's huge. You know what I mean? Like if that was their focus for the next 2 years, I think they might actually have a chance of surviving. So.
Yeah, for sure. And I mean, I agree with you 100%. And I think that's, a big part of that was Clubhouse, right? So Clubhouse gained a bunch of popularity in 2020, and then now Twitter Spaces is kind of the move. And it seems like everybody's kind of moving over there or over to Twitter Spaces because there's just such, bigger following, more people, et cetera, et cetera. But yeah, I mean, I think that trend's kind of continuing, and I'm seeing Spaces get bigger and bigger. I mean, I started doing the Spaces as soon as they came out when I was able to do it. I think it was like November 21. So I've been doing it for like a year and a couple months now. And, before it was like, all right, you get 100 people in a space. That's a huge deal. Now I'm seeing spaces with like 7,000 people going
Oh yeah.
and things like that. So, I mean, it's definitely growing on the platform, and I think more people are aware of it, to say the least. And you get to learn for free, like you're saying, from all these people that have been doing it for a very long time. I had Dr. Anas Al-Haji on a space last night, just going into the oil field, and he's a keynote speaker that people pay him like thousands of dollars to come and
Yeah,
speak
exactly.
at conferences and stuff like that. So, obviously I don't know his rate or anything like that. I'm just making assumptions at this point, but
Right, but
yeah,
he's worth paying. You know what I mean? Like that's
yeah.
and here he is hanging out on Spaces. Yeah.
It's incredible. Yeah, it's great. So, but let's get into, I guess, a little bit about the macro view, because I know you say you don't really break down the macro, but you're kind of in the weeds, right? With like every single day trading and other things like that. And like you mentioned, some of these things they have a schedule, some of them they don't. Whether it's like Tesla doing a stock split or something like that. But how do you view the overall macro, and like, because some days the macro, whether it's CPI being higher than expected, or something like that, it'll shoot almost the entire market kind of down, right? So how do you kind of prepare for those things and just, I guess, view some of these events? And I see you kind of
Um.
playing with some of these charts here. Do you want me to pull up the chart?
Yeah, you can. Yeah, why not? Right, and then. Sorry, I'm trying to get it going. Yeah. I just what I wanted to point out here. I mean, the zones aside, the macro view is always, that's what I found this year. The macro view is extremely important. It's always in play. Intraday, you still need to have levels, obviously price, I mean, SPX can shoot up, 2-3%, come, or, make a 3% round trip. Obviously even more than that at times, but at the end of the day, like my macro view is, it's always in play. And that's, I mean, you look at this, right? Even if you ignore the zones, you just look, I mean, everyone knows about this trend line. I don't really trade trend lines, but I am aware of them, right? I do look at some patterns, especially on the bigger time frames. I like them. The bottom line though is that, like, if you can't ignore this, and I feel like I have to say, like, I'm open to either direction where we're going here. The thing is, the Fed has not changed they haven't changed anything officially, right? I haven't, and that's where I think a lot of us messed up back here, beginning of the year, end of 2 years ago, I guess you could say now. But a year ago, right? Like that was the Fed, and some people, and I obviously now being exposed to to the amount of professionals and people with more experience, some people did recognize this, that the Fed was going to tighten rates and the market was going to dump. I don't know if everybody got the timing exactly right, but at the end of the day, I look back and I'm like, look, we have to, you have to listen to the Fed. And the thing is, that hasn't changed yet. I haven't heard anything. And then I see this on the chart, right? And I'm like, look, there's just, long-term trend line that we've poked through once and we got immediately, we got rejected. This is a weekly chart, by the way. This is SPX 500 USD, right? So this, and you know what? I should just use the ES. This is an Owanda. It's a pair. It's a CFD. The reason I chart this is because it tracks SPX's price. No matter what time, it's within $1 or $2 of it all the time, right? It varies very little compared to ES futures, right? The E-mini futures for the S&P. That depending on what time of the how long the futures contract that it's on is it has been, the price obviously can deviate from SPX spot, right? And during the day I trade a lot of SPX, whether it's 0DTs or next week's whatever. I trade a ton of SPX, and because SPX is only open from 9:30 to 4 Eastern time, right? It's only moving for cash open. You have none of the after hours movement, pre-market, after hours, obviously overnight, and that's problematic. I mean, there's So, anyways, this is what this chart is, but it looks exactly the same as ES. So if we go to, I'll just show you real quick. The the ES literally looks the same, right? So it's the same chart. It's just a little bit different price, but it keeps it closer to SPX. My point here, I guess, not to deviate too much, is that this is still in play, right? I mean, and I get people, I'm one of the things I learned early on, or saying that I heard, and again, like, this isn't my saying, I don't remember who said it, but it's like, you don't have to be the first person on the train. You just want to make sure that you're on when it starts moving, right? And that has saved me a lot of money. It's always great to get the best entry. And even with the macro sphere, right? And I do want to kind of, like, I know that was your question. I want to kind of stay on that. I still personally subscribe to the fact that, yeah, you can dollar cost average in, right? The issue that I have with dollar cost averaging in right now is because if you go back to, this is where I think charts are really, really important. This is a weekly chart. If we go back to, the peak of 2008, right? Or even let's say even down here, right? The second peak, that was on August of 08. Let's just say we didn't get back till January of 2011. I mean, that's not as bad as from peak to peak, but from pre 2008 peak, all the way over to here is 5.5 years, right? I don't want to be buying up here just randomly. I want to be aware of like where I'm buying, and obviously multiples matter. What the company is doing. Some companies didn't come back. I mean, you hear people talk about, and not everybody, of course, but that well, the market just always goes up, right? And it's like, yeah, it does, but companies don't, obviously. So I'm very much like aware of the charts. I do not want to be stuck in a situation like this, to where I'm just kind of averaging down, because life changes. Like, things come up, right? I have 3 young kids. I know a lot of people, for me to be like, hey, I'm gonna benefit. I mean, some, right? A little bit is fine in the background to to say, this is my retirement down the road. But that's not, I'm doing this for a living, right? I want to. I mean, I don't need to day trade every day to do it for a living. It's working out great right now because of the volatility. But if that changes, I'll shift my strategy. But I don't know. I don't want to be the guy to just kind of buy in and then be like, hey, I had to wait 5 years, right? So if something comes up where I want to experience, I want to be able to make some serious money now, and it really comes down to capital. What am I trying to say here? I lost my word, but how much money you have in the game and available, right? Like, I don't know why I can't think of the word. Probably because
Well,
I'm
I
not.
mean, I know a lot of,
Yeah.
a lot of or not traders, investors just say it's more time in the market opposed to timing the market. I mean, you're not saying necessarily to time the market, but what you're saying here makes a lot of sense, right? Like, I mean, if you are investing at the peak of a bubble, right? It's going to be downhill for the next couple years, and it's going to take a long period of time to re-achieve those gains, right? So I mean, I agree with you here. I think like a lot of people kind of saw the COVID crash, right, in 2020, and saw it like dip down. Maybe I don't know the exact numbers of how much it dipped down, but they
Right.
saw it run quickly back up within like a few weeks. So I mean,
36.
like it's yeah, so a
Yeah.
36% dip. You made that all back, and now it seems like we're kind of slowly chipping our way back down to where we started. And but like with that scenario, right, in 2008, we had a down market for a few years, right? So it took like what, like I think it was like 8 years after 2008 if you invested at the top to kind of get back to where you started. Or was it
Yeah.
even less time than that?
Oh,
Yeah.
2008. Yeah, no, it was five. I mean,
Yeah.
if you invested, if you got in at the pre, so like if you got in here, sorry, let me. But yeah, it was. So if we got in, if you got in at the top, let's say. Now, obviously, most people didn't. But if you waited for
Yeah.
that to come back, right? You're talking here, which is, I mean, October of '07 to April of 2013. I mean, that's
Yeah.
that's a
So
long.
5 years about. Yeah.
And here's the kicker: if you were back here in 2000, I mean, this is the indice, right? This is the index, of course. Individual companies, some did really well, some obviously didn't come back. I mean, what was it, G and I mean, I know there's a bunch of names that are still around, but price wise, they're just they were shot. But look at back here in the dot-com bubble. You know, that's all we retraced at the peak of '08 as far as the S&P goes. So I mean, you don't want to. This is why I've taught some people that that were interested, that were just kind of they just don't look at charts, and I think it's important for folks to. I mean, if you have a strategy that doesn't involve charts, cool. That's fine. Like I don't. I'm open. If you're making money with it, it's great. But I tell people that are just kind of new to it, I'm like, look, start looking at the charts, right? You don't have to look at the small time frames. You don't need a bunch of indicators. Just start, look at the price action. Put some, make it candles and look at the price action. I mean, even the monthly here, you start to see patterns. And I think, obviously I have an interest for this stuff, but you start to see where price wants to retrace to. And for whatever the reason is, it works. It's a fractal. The markets are kind of fractal. They want to retrace back to these levels where there was a struggle. There was the supply and demand was kind of balanced, but there was a struggle in a sense, right? And then all of a sudden you get these big moves up and away, right, or drop. I think that those are the areas that you want to focus on, and in order to see those, you can see those in data. I'm sure, right? But obviously the visual is huge. So yeah, not to cut you off, man. I'll talk and talk and talk. So feel free if you have more questions, just to butt in. But
No,
hopefully
man,
that's
that's the
yeah,
point of these, right? Is for you to keep going on and the listeners come in here to listen to you. They hear me babble enough, right? Uh, but I'm kidding. I appreciate that insight because I don't think like a lot. I think everybody tries to simplify investing, right? They say, like you said, dollar cost average in. Don't really like look at the charts. Don't worry about the price. Like it'll go up eventually, right? But we're coming to a time that kind of ties me back into like the macro, right? Like you say you don't really look at the macro, but you look overall at the charts and to kind of like look at the signals. And it seems like, the signals as far as like macro wise that are pointing to is a recession. We could have an argument whether or not we're in a recession or not. They've obviously changed the definition of recession since this whole thing has kind of gotten started, but it seems like it's a time that, can be very difficult to, not only like position yourself as a long-term investor, but, be a trader. So, I guess my question to all this is like, all right, how are you kind of preparing yourself at going forward, knowing that there is a pretty good potential of a recession coming up, and that the stock market isn't going to be all peaches and daisies as it was for like a decade. I know you didn't invest for that entire decade; you just kind of got started in there, but it seemed like,
Yeah.
for a good period of time, you could throw money at any stock. You can like literally, like I know we had,
Yeah.
even in the COVID run up, we had Dave Portnoy from Barstool Sports. I think he was just like rolling dice and just getting tickers based on like what he was doing on those dice and whatnot. So,
Yeah.
like there was people just doing that and making a lot of money on that. And so, with that all said, and that little ramble that I went on, how are you
Yeah.
kind of positioning yourself and preparing for a potential of, a long-winded downturn?
Yeah, no, it's a great question, man. And I mean, this is I know I was just doing this as you were talking. But if you look like it's at least 10 years up, it's 10 years from if you were conservative and waited for the recovery after '08 to get in. Let's say you got in like 2011, you did have a decade. So a minimum of a decade of, in the long-term hold worked out. I think one of the things, so I do have a bit of a plan as far as my long term strategy when I want to really start getting into things, and I'll get into that for sure. The what drives this, something that I learned that was explained to me, or I heard, maybe it was in a space, but it became very evident. It's like if you look at traditional monetary cycles, right? There's market cycles, but then there's these monetary cycles that some talk about, and it's like they normally take. I mean, a market cycle, a true market cycle, that has to do. I mean, that's really based on inflation, right? Not just not something like COVID, or I'm sorry, not inflation, but interest rates, right? What the Fed is actually tweaking. Inflation going up, they raise interest rates and adjust that. That takes a long period of time. And I think, the way it was explained to me is that it's like, look, we've been conditioned. I mean, obviously, if you were involved in '08, you have some experience of a longer cycle. But if you look, even back, what was it, 2018? There was this in 2016, right? When did that pop off? Anyways, these tended to bounce back pretty quick, right? I mean, these are monthly candles, so obviously, there's some time involved here. But we're talking like traditional recessions, take years, right? Minimum like of 18 months to start seeing like the real effects from it. And that's something I think that with all the new investors, right? Even someone like me, right, who has been in the market, I didn't experience 2008. I mean, I was alive for it, I remember it, but not from my perspective that I have now. And I think that if you're not aware and thinking like, hey, what we've been used to is not the same, right, as what we're experiencing now. The market is shifting, and the bottom line is that like what the Fed is doing we've had crazy interest rate hikes. I think a good example is what happened with the bond market, over this last year. I mean, prices, like, they didn't correlate, or they didn't have that inverse correlation like people thought. A lot of people got screwed, really. I mean, they their hedges didn't work out. So I think that it's good to recognize that things are changing, right? And that's why I go back to that. That saying, like, you don't have to be the first person on the train. Just make sure to get your ass on it when it's starting to leave, right? And what I mean by that is literally that I don't care about catching the bottom of a bounce for anything longer term, right? Something that I want to get in long term. I want to see a base, right? I want to see, at least on the weekly, I want to see a real base. And we can, I guess let's look at Apple, because Apple's probably a good one, right? I can just delete these. All right. So, anyways, this is Apple, and I guess the thing is, I look at this and I think this thing is so far overextended. It's come down a little bit, right? But it's not. I don't know. It gave out a bit, the last couple months, but I think it should come down more. I look at this and I'm like, look, I don't see a base here, right? I see it looked like it started to form a base and then it broke. Okay, I can look at this chart, and I think anybody could look at this on a weekly and say, hey, look, I know that this is 2020, right? And obviously, so the peak was right around $82. It's at 133, right? The high obviously was 180. Like, it's it's up there still. And I understand, conditions change. It doesn't have to come back to pre-2020, but that wasn't that long ago, right? It's not like we're saying in 2010, it was, at 80 bucks. My point is, I guess I see something like this, and then I see Apple break, and I know Apple is a big, it makes up a huge part of the markets. I mean, obviously the Dow and the energy sectors, they tend to be a little bit different, but Apple, when Apple crashes, most of the markets follow. So this is what I'm looking for basically is I'm like, two things, or well, more than two, I guess. But the main thing is the Fed hasn't changed. We're still raising interest rates. I think we're just starting to get to the amount of time that, where we can see some of these longer term effects and see how they're actually going to, how they're going to affect us. And the market is not the economy, obviously, right? I love how the Fed talks about, what do they call it? Main Street, right? Like, Main Street compared to Wall Street. It's like, I mean, honestly, I'm of the opinion that the Fed cares about Wall Street. I mean, it is the financial markets. It makes sense. You can't have the financial markets collapse and not have that impact the economy. There's huge amounts of retirements and just funds. Everything's leveraged, to the hills. So it makes, like, I understand why, but I don't like this idea that, like, the Powell's really only thinking, like, he kind of puts it off across that, like, he's thinking about Main Street, right? About these businesses. We heard that during COVID. And meanwhile, all they're doing, they're jacking up, printing money, whatever you want to call it. And here we are kind of reaping the, paying the piper. So what I see I know all of that's going in the background. I look at, I take my expertise in the charts, and it's like, look, I can find bases, right? We won't go into that a ton today, because I mean, we can do that, I mean, if you want, but even at a future date, going more of the technical side. But it's all on Twitter. People that come to the spaces and hang out. I mean, definitely people come hang out with us. I'll push it up a little bit there. But the thing is, I want to. I don't. This doesn't look healthy to me, right? I think that there's more downside. And when we look at something like, let's look at SPY, right? Oops, I got too many different charting platforms. I look at this and I'm like, it is starting to come down, but I really think that we're going to see another leg. And at that point, that's when I will start. I want to see a base. I will say this: one of the best strategies you can do if you want to have money in the market, long term, besides the day trades, or even you could call this a short term trade. But when we get these big moves down and we make lows, you just start buying a little bit. And then if you see it base out over a couple of weeks, right? Like this last base that happened September, October, it took what, 1, 2, 3, 3 weeks of kind of settling out, 2-3 weeks. And then that fourth week, we obviously started to get the push up. Even if you wait for that initial push up and you buy in a little bit, you can ride it up, because then at that point it's like, hey, if this is it, right? This is the breakout. Good to go. If this is it, this is the bottom, then hey, let's, you're fine. You're in. As it comes up and actually confirms that, you can get back in. And I think what people aren't realizing that are extremely bullish moving forward is that when you look at the charts, and I know individual companies are pumping, and that's great. Like, I mean, when I see meme stocks pump, I'm kind of like, I'm a little suspicious, right? I'm like, this is just hype shit. It's like people think 2020 is still here, except, we could have the mentality and the market participation of 2020, right? 2021. But you don't have the backing, you don't have the companies, getting that free money, right? Or that, interest free, it's free money is what I call it. People are getting loans, startups. I mean, my wife is in that, that's her area of work, is in, she's worked for multiple startups, and, and some are surviving, but a lot aren't, and if their product is kind of half-assed, then they're gone. They survived before. I just feel like we don't have that. Like the companies they're not going to play their part. And that's why I think every time we see a push up, it gets sold off. It's like if you'd bought in here, we pushed up. Well, we didn't break out. We didn't actually get that move up where we get a weekly close, much less a monthly close, but like over some of these key levels, something like that trend line even, right? Much less a horizontal level, which is my bread and butter. I can look at this candle here and say, look, there's weekly supply right here, based on this August 8th candle, right? So when we get, if SPY got up to, to 414, 415, let's say, that is a key area where I would go short because the risk to reward is there. But if you're an investor, you're saying, okay, I want to, I bought in. Well, I want to see that get broken through. And when I see it stall out like it did, back here in November, and we fall off a cliff like this, yeah, we didn't fall all the way down and make new lows, but it doesn't matter in my mind. Like this double step has happened, enough times, and we see it in previous market cycles, right? Where we look back and we see that. I'm sure you've seen the charts where there's correlations where you have where they're matching up. This is what it looked like. I think the 2008 overlays. The percentages are different. Maybe the time frame is a little is definitely different, but the percentages are the same though. It fits. It's almost like a perfect fit. And I mean, past what happens in the past does not obviously indicate the future, but if you can't ignore that, right? And especially saying that, look, what drove us up here, much less 2020, but all of this, right? I mean, all of it, this whole run, I mean, it's, all of that it's changing. It's not gone, but it's changing, and they're drawing the liquidity out of the markets. And I think that's one of the biggest things with the macro that is important is to, kind of shed the, you can short-term trade all you want, right? And I know like energy bulls are doing well. People are loving it right now, right? Like people are still doing, they had a great couple days, a great week. I did put out a tweet that I'm like, look, I know people are doing victory laps, but it's like, why, we haven't gone anywhere that we haven't been before, right? We're back to this damn trend line. This is what we've done every time we rally up. Everybody kind of, starts to get bullish. You hear, how well it's doing. Like there isn't going to be a recession. And I know there's positive data. And then all of a sudden we roll over. And it's like, I'm not, if it's not broke, don't fix it, right? Or I don't know if that's the saying. Maybe it's if it ain't broke, don't fix it. But the bottom line is that I'm like, look, I would rather it be short up here, right? Or locking in profits or setting a tighter stop. Because if you're buying for the long term in a recession that we're not even sure if it's starting, you want to argue whether it is or not, but you don't know. The uncertainty is there, right? It's like, I wouldn't, you can buy for the long term, but I would personally, I'm like, I don't care about taxes. I mean, I care about taxes and managing your tax, exposure. But at the end of the day, I'm like, I'm not going to let a position, especially as they get bigger and bigger, go to shit because, I have to focus on this idea that like I'm a long-term investor and I'm not gonna let this like stop out. It's a mentality I think that people get caught up with. I don't know. It's not for me. Anytime I get into something long, I've gotten stopped out here, But the thing is, I've locked in profits from it. It's been like one of the best, year. Honestly, this year's been this last year was better than for me than any other year of my career. So I think part of that goes, says that like the strategy, the methods that I use is effective. And I'm teaching it to people now. We do have a private Discord. There's a YouTube channel, and then obviously the Twitter Spaces where we, I talk about stuff all the time. People can come up. I'm very open about it. But the thing is, those people that I'm teaching are making money, right? And that's really that's confirmation that I love to see. It's kind of like, look, if it's working in this market, I don't know. I kind of lost my train of thought maybe a little bit there, but the thing is, I'm like, look, don't get caught up. I hate seeing people caught up in this mentality that they have to be a certain way because the market has changed, right? The key here, the only reason I'm in the market is to make money, and same reason with you, right? And most people. So anyways, that's kind of my macro take on it. I pay attention to it. I respect everybody, and I love the discussions. A lot of times I just listen, but I think I don't know. I think it's like watch the Fed, right? And in the meanwhile, like make some money, right? Especially if your long-term portfolio is getting hacked and hammered. It doesn't have to be me. Come learn from somebody, right? So.
Exactly. And I think like, as we're going along this, exactly like you said, a lot of people are just like hanging on every single word Jerome Powell says, and like the market, that it can't be sustained like this. I mean, just one man has all this power, right? As that Kanye song goes. But anyway,
You did mention something that I want to ask real quick to kind of wrap up this whole thing. Is
Yeah.
you brought up the meme stocks and kind of like everything that's mooning and everything like that. How do you avoid kind of jumping into something like that? And like as somebody that's a trader, you know, I we don't have to dive into like a full technical analysis or anything like that, but how do you avoid something where it's like, that these game stops or something like that? Or do you actually try to jump in on some of these like YOLO GameStop kind of trends?
Yeah, I mean, so I have no problem trading them. I don't trade all of them. I don't chase it. But I look at it as I mean, here's the thing. If you can structure, my whole thing is that if you can structure a trade, right, in a way that minimizes your downside and gives you a good risk to reward, right? You can say, okay, look, if it breaks this level, I'm out, right? Obviously, that's your stop, but and then you have a target, even if it's multiple targets, and at least it's like when I get up to this level, I'm going to tighten up my stop, right? Or I'm going to take off half my position or 2/3, and whatever that is. If you can structure a trade, I don't care what the ticker is, right? I don't care what it is you're trading. It could be coin flips still, right? If I could structure a trade around it, I will. But it's all about the risk to reward. So that's number one how I look at it. I think that you can trade meme stocks. You can make some killer money on it. You just have to know. You have to understand like what it is you're trading. And the thing is, what has worked really well with meme stocks is buying, either buying shares, right, of commons, or what I prefer to do is to buy leaps, right, when they've crashed, when they've come down. You buy something that's a year or two out, right, or a year has worked so far, but you don't know, right? And the bottom line is that it's like, look, that you got to figure that could go to zero. I mean, the companies could go out of business. They could get shut down. I mean, there's there's a lot of risk involved with that. So the cool thing in this market, though, this is what I tell people all the time that trade with me. I'm like, the beauty of this market is that because of the volatility and the big moves that we see, right? You don't need as much capital as you used to get the gains that we want, right? So it's like I think that's what it gets missed in the hype, is that we all kind of we think like, oh man, this just went 120%. That's what I need to get, right? And I like, you start doing calculations in your head, and it's a trap, right? It's like, look, you got to look at it like, cut your risk in half, right? The amount your position size, cut it in half, or even like a quarter, right? But if we're already in a market that's kind of like 6xing everything, well, you're going to still make out. And that's how I look at these, is that it's like, the meme stocks especially. If I see something's moving, I have no problem momentum trading. I don't really do penny stocks, but I made a ton of money off AMC and GME, back in 2021. So, I'm not against them, but I do think you have to be aware of what you're trading. So I don't know if that, and honestly, if you're a new trader, the issue right now is we have people are kind of tainted, right? They're kind of damaged by the fact that social media has blown these up to the point that, like, by the time, even if they're learning it correctly, like how to manage your risk, like, you either have an interest in that, or you're just like, nah, fuck it, I'm going to put down, I got $300, I'll throw this on a play and see what happens. And most of the time they get smoked unless something maintains. I mean, these meme stocks will stay up for days at a time, man. I mean, it's pretty wild. So I don't know. What's your
Yeah, for
thoughts on
sure.
it? What are your thoughts
I
on
mean,
memes?
honestly, like I'm not much of a trader. I try to learn and like listen to you guys and other traders as well, because I think there is something to learn as like the cycles of just overall, and just kind of like what we were talking about earlier, right? Like I think it's a really interesting time where we're going to be kind of down for a little bit, and people just thought like, hey, the bottom of the COVID crash, they're going to shoot right back up, and they didn't really think about the long-term consequences of the Fed printing all that money and just basically giving away free cash. But I mean, like the meme stocks, I'm not gonna lie, I tried to get in a little bit of GameStop, because like one of my buddies, and like that was like right when, I don't know, like I was learning about it. I was just kind of starting to put out content, and I'm like, well, like everything that I've like studied for the past 4 or 5 years now means absolutely nothing. And so I kind of had this moment where I was like, what the hell? Like
Yeah.
everything that I've kind of just been going through, listening to all these smart people that have been very successful. I'm having friends make like a shit ton of money off of just like reading a subreddit. And so
A
I'm
subreddit.
like, all
Yeah.
right, well, yeah. So I'm like, all right, well, I'll try it. And then I kind of got caught into it. And that was, like I feel like, as for me personally, like, all right, well, I had it one time. I got into one of these YOLO movements, and now I'm out, and I can see the other side, and I didn't throw a bunch of money at it, luckily. But like I understand kind of, I guess the ins and outs of why that happened, and like how that could potentially happen again, I guess. And so that's
Yeah.
why I'm just like, all right, well, I'd rather just be more confident in what I'm investing in and understand that, opposed to kind of getting into like one of these YOLO things where maybe I get lucky and I get rich or whatever, like I'd rather take the less risk on that. But
I think.
I guess to each their own.
Yeah, and I think you're spot on with that, man. Is that it's like it's I don't know. It's kind of like for me. It's like it's like hey, if the opportunity's there and my timing is correct, right? If I'm able to catch it and I'm not in other trades because I do a lot of SPX and I trade futures as well, right? So like there's I don't know. I've missed a lot of the pumps this time around, but I also don't really care because there are so many other lucrative um, not just lucrative, but more predictable, right? I mean, obviously nothing's 100%, or some of these can be crazy, but it's like I can find multiple other tickers, much less futures and SPX that that even if you're trading commons, like it's a little more predictable, but the volatility is still there and the opportunity is still there. So yeah, I don't know. They're kind of a hit or miss with me, but that's interesting. Did you make money on them at all? Did you have some
No,
good?
I
No.
no, I lost money on GameStop. So,
Okay.
I mean, and the other thing that's kind of, I guess, the rule of thumb. I don't know, that from what I've just learned in my experience, it's like once you kind of hear about it in the news and it starts to go like a little bit mainstream, you're probably too late. So,
That's dude.
that's just kind of,
Yep. And that's Twitter too. I know Twitter is Twitter is great for breaking news, right? But the bottom line is that, Twitter is now like a lot of people are starting to know that, right? So like you have to be
yeah,
extremely fast. And see, for me, and I know like I won't go on forever about this, but one of the biggest things about the way that I structure the charts that I find these levels and zones is that I can, I kind of have like some of the structures set up, right? And then as something comes in, the market starts to pump or drop or whatever, I can, I already kind of have a half game plan, right? Because I already have these levels set. On memes, it's very difficult to do that. So I don't, I mean, you can find it on some, like I'm looking at GME right here, but man, this is just an up and down shit show, right? So you either, honestly, look at that. If you buy it low, buy me, I don't know, buy leaps. But I guess my point is like, if I can't see like some underlying structure in the chart to begin with, then it's very unlikely that I'll hop into it last minute. Because that's, I want to have, like, if I know there's some levels and SPX starts moving or Tesla starts moving or, Netflix or whatever, Roku, like I have levels on that chart. I can make a decision pretty quick. If I'm going to a meme stock where I'm like, well, where the hell's it going to go? Well, that depends on how many people are hyped up about it. Like, that's not a metric that I can control. So, or that I can interpret, I should say. So,
yeah. I
yeah.
mean, I think like people are even making ETFs off of like how much like people were talking about or mentioning a certain stock. So it got a little out of hand there, but
Yeah.
that's neither here nor there. Alex, I do appreciate your time coming on and
Yeah.
coming on discussing a lot of like a little bit of a different conversation than I normally have, but I think it is timely because of, like just like we were talking about, right? Like you got to kind of know where you're at in a cycle, like overall, like because stocks don't always just go up. So I really appreciate this conversation and the insights you bring. Why don't you tell everybody where they can find you and what you got going on?
Yeah, listen, thank you, man. I really appreciate you inviting me to come on. This is it's new to me, but it's been a great conversation. I enjoy talking about this stuff, so and it's nice. I don't know, this is enjoyable. I've had a good time, man. So thank you very much. Yeah, so I'm on Twitter, Traders Retreat. So that's at Traders Retreat. I'm also on YouTube under Traders Retreat. Pretty much all the social media is at Traders Retreat. Twitter is the main spot that I hang out. I am going to be focusing more on YouTube in the future here. Some of the streaming stuff we were chatting about pre-market or pre-show. Yeah, the main thing that we do though publicly, I do have a private Discord. If, you know, for people that are interested. You know, basically, there was a demand. I had people come up and say, "Hey, do you teach this stuff after, you know, after market hours, basically, right?" So, which I, you know, so I kind of evolved that into that group that I had before into the group that we have now. And it is paid, right? I mean, I do spend a ton of time in there. I think the value you get out of it is well worth it. But beyond that, right? I'm on Twitter Spaces like 2 to 3 times a week, and the schedule should be tightening up more here in the future because all my kids are now in school or daycare starting next week. So I'm very happy about that and excited. But yeah, so come on to Twitter during market hours. We're normally on. It's at Traders Retreat. You know, the spaces are awesome. Anybody's invited, right? Come up and speak. You know, if we're actively in a trade, you know, we tend to keep the focus on that, or at least like we'll call, you know, we'll kind of be like, hey, this is what I'm doing. But there's discussions, you know, it's great for the discussions that we've had. And we've had some really great discussions over the last, 6 months. I think I've been doing it 6 months. So anyways, man, yeah, you know, I'd be happy to come on and talk about a lot of stuff with you, you know, at any time. But thanks for having me, and you know, check us out. You know, it's a great group of people. Even if, you know, like I said, just on Twitter, you know, the circles. I feel like I'm lucky to have found, you know, the group, the levels of people that I've come to know. You know, so.
Yeah,
Thanks a
for
lot.
sure. And definitely, yeah, of course. And we'll have to have you back on sometime in the future again. And yeah, everybody check out his YouTube and his Twitter for sure. I mean, his Twitter is great. I will post
Thanks.
both of those too in the show notes and in the comments. So be sure to check that out. All right, Alex, thanks so much.
Thank you. Appreciate it.